Welcome to Money Discourse, the new name for our podcast. Yes, Average Traders is being retired as we discuss a lot more than just trading.
We really nice. We're just not that average anymore. I think we realized that, we're just not that average. Maybe we're below average, above average, but we're just not average. So there we go, Money Discourse.
Yeah, it's also been really nice to see the big move in the markets over the last few weeks, giving our portfolios a bit of respite during this tough year. Rajan, how's your portfolio looking?
And I mean, this has been a great move. I mean, what it is, again, the Fed rules this market. The Fed moves, the Fed direction dictates. And so we've had 275 basis point back-to-back hikes. But like we mentioned in previous podcasts, inflation in terms of the raw materials is actually coming down. So you're seeing a lot of wheat, lumber, corn, soybeans, all of these are dropping quite a bit. Oil is now stabilizing around that $100 level. It's moved a bit up today, but it's not around a 120 level. And we've seen it in the gas pumps, where it's about 20%, around 20% lower than it was literally about a few weeks ago. So this is all coming to fruit. And so this is now giving inflation, the Fed reason to now taper off the Fed hikes. And Jerome Powell did note that inflation, the Fed rates are now coming towards the neutral level. So right now we're at 2.5%. They're saying it could get up to 3.5%. And so if they're going to do 50 basis points in September, realistically, that leaves a couple of 25 basis points or maybe one more 50 basis points until they stop. So we're seeing at the long end getting sold off quite a bit as the yield curve remains inverted. But that is the overall thing. So the market has now had an outsized reaction to the whole tapering off argument of interest rate rises. And that's what the market wanted to see. So we're seeing a bit of outperformance and growth, but really these big tech names, which all of them pretty much reported over the past week and a half. We had Tesla, we had Google, we had Amazon, Microsoft, and Apple, and none of them were blowout earnings. In fact, but the reaction to pretty much all of their results was more blowout than I've seen in, we had Tesla, which had a huge move after their earnings, which was mixed, but, good enough. Amazon had a 12% move. Apple had a solid move, 2 to 3% higher. Microsoft actually reacted initially negatively to their results as they came in a bit subdued, but their guidance and the fact that they're still forecasting double-digit growth in their cloud division is still killing it, which is one of their main bit, that Azure cloud is in. So when they gave the guidance after their results, it really turned the stock, and from being 6% down at its peak, ended up being about 6-7% up, and then it kept on moving, and I think at last check it was above 280. Google as well, mixed results, nothing fantastic, but again, it good enough to push it up 6-7%, and then Apple was solid as normal. But with Apple, what it is, you see that their services is now 25% of their revenue, which is very interesting. So they're getting these recurring revenue stream, which is really just taking hold, and so it's shifting away from that huge iPhone dependent. So their iPhone revenue came up to about 50% of their total. In fact, less than 50%, when before it was about 2/3 to 70%. So you can see how that shift is happening for Apple, which is really supporting their revenue base. And then Tesla, well, you can talk about Tesla. What did you see in their earnings?
It's amazing to see Tesla up 25% in the last 2 weeks based on good Q2 earnings. It's like, I think it's around 40% off its June bottom. Even when you look at the normal beta that Tesla has to the NASDAQ, Tesla seems to be outperforming. Tesla's 2023 estimates are up 10% over the last month. And it's all the backdrop of, better macro. We've got the EV credit proposal, and also those who didn't like Tesla taking on their Bitcoin have seen, obviously, Tesla sold off 75% of their Bitcoin and realized the gain, but that offset the accounting loss they had to recognize, even though they haven't sold it yet on the remaining 25%. Their operating efficiency is still off the charts, showed that, they also had industry leading margins, even with their most profitable factory and the one that actually produces the bulk of their cars. Gig at Shanghai shut down due to COVID issues in China. The question is, will Moody's upgrade Tesla to investment grade? And if that happens in the next month or two, it'd be a nice catalyst to take Tesla over 1,000 again. I think it feels like it's a good setup with Tesla, because obviously they've got, as long as macro holds, we've got a couple of key things, like I was saying, investment grade upgrades, the 3-for-1 stock split, the Twitter overhang potentially is going to lift, and what's Tesla going to do with their stock? Some people are talking about buybacks potentially. So,
I think Tesla has basically benefited. Yeah, it's benefited from the earnings, but the overall market moves, I think, has definitely benefited these big cap stocks, especially the tech ones. Amazon's about 35% from the low, because I think it was around 2,000 pre-split, and now it's over 2,700. So that's had a 35% jump. Apple's about 20 something. Google, I think that's had about 20% odd move as well. The only one that's a laggard is these social media names. Like Snapchat had another awful earnings, down another 40%. That's their third 40% decline plus on earnings. And then Facebook followed that up, and they're still printing money, but it's obviously the growth ain't quite there. So Facebook is the only one that didn't really, join in this rally on these big cap names, as it's still languishing below 160.
It's really interesting with Amazon to see that even post earnings, the street revisions didn't budge much at all. So analysts didn't upgrade it or anything like that, or change their price targets because it wasn't so much as a beat; it was kind of more of a miss.
They had a $3.9 billion write down on their Rivian stake. And obviously, FX headwinds have affected a lot of these US companies, especially. But on the flip side, in the European companies, the FX revisions, the FX tailwind has added around 5% to their top line. So that one has been actually quite good. But with Amazon, I think what it was for them is that it's just showing that they've still got revenue growth. But these analysts are just awful. I would not read anything about analysts at Rivian. Like, these guys are still giving buy recommendations on Snapchat and bringing their price target down from 50 to 15 and stuff like that. They're just, But the main thing, there's two real indicators, Jim Cramer and Cathie Wood. If they go long, you go short. That's basically what you have to look at. Cathie Wood went into Teladoc again. She doubled down on Roku once again. I read her thing why she did it, but again, Roku, Teladoc, just
explain that to me. I cannot understand it.
I don't. They're in every TV. That's what everyone said. But, the whole streaming media is just such a cash drain. It is remarkable how she's doubling. I remember seeing her buying Rokus in the 300s, 350s, and she's been averaging down. And now, Roku, I think, is 60, 65. It's just horrible trading by her. And, there's averaging down. And, you could say averaging down on a company that's actually making money. But these loss-losing companies that she keeps on doubling down on, which these high cash burn companies, it just makes no sense. Right now, they're killing the companies that are just, hemorrhaging money, and Roku and Teladoc is at the prime part of that. So it just baffles my mind, just the strategy. And, maybe she might be right, but, maybe eventually, everyone could be right if the time horizon is long enough, like 30 years. Oh, yeah, I told you. But the thing is it still going to be around? I don't know. I mean, it was interesting that One Medical that Amazon acquired. Cathie Wood was a holder of that one, but she was long at 27.28. The stock was about 9, and Amazon bought them out at 18. So instead of taking a 70% hit on it, she ended up making a 40% hit on it. So it's a really bad, it's just really, she's losing her credibility. And I know people can say, it's short term, long term, but you just look at the quality of the company she's going in. It just doesn't make sense. But maybe she just, other than that, the only reason I can find why she might want to do this is just because it's dropped so much. Like, how much lower can it drop? But she was getting out of Coinbase. She got out of Coinbase, and Coinbase rallied 25% as soon as she got out. So it's just wild. It's crazy. It's like,
she also got out of Tesla too, right? So I think she sold like 30.
She's been skimming it. I think. Yeah, I mean, what I've been doing, I don't know what you've been doing in this market, but I've just been shaving on the way up. Like, it's been all I wanted, because, for the last 2 weeks, I literally had nothing more really to put in. I got in as much as I was comfortable doing without doing any leverage or anything like that. And then I pretty much sold off about 7 to 8%, 9% of what I had. So now, I'm just hoping it keeps on going up, and then I just keep on selling till I'm about 20% cash. And then after, if it keeps on going up, I'm not fussed. But if it goes back down, I've got some nice powder to get back in. So that's the way, some people just like to just hold on, and they're much more longer term. But for me, I like to trade around a core position. So I've got a core position, and then I'm just trimming bits, putting it back on, trimming bits, putting it back on, trimming bits. And then that has helped a lot of my positions that I got in, like Square, for example. I got into at horrible prices, but I've been just skimming in and out, and has managed to bring my average down to like 110, considering my initial price I was in was 270, 280. So just by doing these little skims, it's got my average down a lot. So, if I can get down near 100, that'd be decent. So, I mean, that's the way I've been playing it. But what about you? What you've been doing?
Seeing this market, like, obviously rally, well, it makes me feel, a bit confident, which then I know it's a warning signal. So I don't know, because obviously the Fed is still tapering in this market, and who knows, it's just, is this going to be a sustained rally? I don't know. But what have I been doing? I sold when Tesla was in the 600s, I sold like a 900 put for like $23.50. So that's obviously done really nice for me. But otherwise, I haven't been doing too much. I mean, I've obviously been selling calls, but like way out of the money on my Tesla positions, just raking in like $20 a contract or something like that. What I'm going to be doing, it's a bit of a tricky one. It's so easy. Like, it's so easy to become like, oh yeah, things have changed now. But then the market can just switch like that, and then everyone gets so bearish. I find it just absolutely, the whole psychology of the market is just fascinating to me. It's literally just this time a month and a half ago, it's just like everything is going to the toilet. I know someone who had complete dry powder and then kind of didn't decide to go in because they thought, everything's going to get lower. Who knows? He might be right. But I don't know. It seems like the big money is kind of, dictating things right now. And inflation is kind of under control in a way, but who knows? Will it carry on? I don't know. But
yeah, I mean, what I was just saying, just as your thoughts was, let's just take a look at the chart to just see a picture of what's going on. And there's obviously a lot of macro backdrop at the back of this, but we see we were in this downtrend, and then here was the bottom, which was the 36,700, and we sort of went back into this channel. Now we broke it out, and we're actually now the early June high levels that we're sort of hitting. And if that breaks, we could actually get another about 3-4% move to this next level, which we reached back in May, until we get to the March levels, which was around 4,600. Now, I think we need much more of a positive catalyst, or maybe negative catalyst. The more if the economy starts going more into a recession, we're in that sort of market again. The worse things are macroeconomically, the more it might actually benefit the markets. So that could push this market up. But if the economy is still strong, and it gives the Fed the power to continue doing its policy of pulling back easiness, then we could sort of hover. But we could see we've had this mad move from the low, about 500 S&P points, and since July 14th, so literally in the last 2 weeks, we've gone about 10% in the S&P and slightly more in the Nasdaq. So it's going to be very. The charts is pushing very bullishness, but we get into this key level back that we really chopped around in June. We pretty much almost the whole of June, but a good first half of June, we went around this level before we then had this big drop. So we'll just see if this happens the same way. We had 3 strong candles to the upside. So, I mean, I think we're going to now sort of consolidate around this level. I'll be surprised if we keep on pushing up. But if we do, that's great. But this is where I think now we're going to sort of taper off this next week, and we'll just see what happens around there.
Yeah, it really depends. I mean, will big money get FOMO and, think that, they missed the bottom, or were they the ones that pushed the markets off these lows?
Yeah, we've got a raft of earnings. We've had the GDP. We've had the main inflation numbers. The main data that's come out the last week. Inflation numbers we're going to have not next week, in a couple of weeks' time. So we'll have non-farm payrolls and see what the job position is like next week. And I think that will be telling to see how the Fed policy dictates further on. But again, we're going to see a lot of earnings. We've seen the big companies all report, but we'll see some more of these, the next tier level, especially these tech names. So that will be very interesting to see how those all work out.
And what's your thoughts on crypto?
Yeah. Well, crypto again is so highly correlated to the Nasdaq. So we've seen a big bounce in Bitcoin. I think a lot of the sellers have been done short term. With all of these hedge funds, these guys all going belly up, Voyager, Celsius. And so now I think a lot of that selling pressure is sort of gone. And with the market bouncing, just Bitcoin just bounced pretty much the same. So it's so correlated with the Nasdaq. So if we have another downturn, then, if you look at Bitcoin, it's about 20% off the low, and which is similar to what it was in the Nasdaq. But yeah, we're going to just call it a short one for this week. And we'll definitely do an update at the end of next week to see how all the earnings and the data falls out for the next of the for the rest of the week. So we'll see how that all works out.
So thanks again, and we'll see you guys in the next one.